The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 8th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. My outcome is to help you to become a better money master and to provide you the tools so that you can lead an inspired life, because leading an inspired life, folks, that is where it's all at. Hopefully you had a fantastic weekend out there. I know I did. Looking forward to being with you for the week out here. Let's go take a look at one of our tools. This is the tool that I call "To be wronged is nothing unless you continue to remember it," folks. To be wronged is nothing unless you continue to remember it. Now, if you've ever received an email from me, and if you haven't, maybe send me an email. I'll be happy to respond if you've got a question. What you'll see as part of my electronic signature is the phrase, and you've heard me say it before, be a pioneer of your future versus a prisoner of your past. That's one, folks, that I absolutely think that you should write down. That's why I wrote it down. That's why I included it as part of my signature out there, my electronic signature, because I believe that it really is the way that you should live. You see, what pulls us forward in life is the promise of the future. Much like in the case of Christopher Columbus. It is Columbus Day, or at least we're certainly celebrating today as Columbus Day out there. Yet what holds us back is the pain of the past. Let me ask you this important question. If you knew right now, this very second, that you would achieve your outcomes in life, whatever it is, whatever your outcome is, folks, how is it that you would live this very moment? How would you live today knowing that you will receive, knowing that you will manifest into your life your outcome? How would you live today? How would you live each day from this point forward? How would that journey that you're on, that each of us are on, how would that change? How would you celebrate today? Since we're celebrating Columbus Day, how would you celebrate your Columbus Day out here? How would you live, folks? And if you're not living that way today, the question is, why? What is it that's holding you back? Is it that pain of your past? The good news, folks, is that if you can feel it, I guarantee you, you can heal it. Maybe you should write that one down too. If you can feel it, you can heal it. I understand pain, perhaps as much or more than anybody out there. You don't live through life and not have painful experiences, folks. You certainly want to be able to learn from them. And to be wronged absolutely hurts. I mean, it's maddening, it's infuriating, it's painful, it's absolutely unfair. But repeatedly reliving what happened a day ago, a week ago, a month ago, a year ago, oh, even worse. How about years ago, folks? All you're doing is rehearsing your pain over and over and over again, as if you're trying to win the Academy Award for pain out there, for what it is that's going to hold you back from attaining what you want to manifest into your life. Practicing old routines, folks, that won't win you any awards. It only serves to continue to deliver pain day in, day out. How would you live today if you knew you were going to attain your outcomes out there? What wins awards, folks, what wins those Academy Awards is one word. It's called forgiveness. Forgiveness is the process of giving up the old for the new. To me, that sounds like a beautiful plan. The false for the true. I know that that is a beautiful plan, folks. Forgive yourself, forgive others, forgive everything. Just simply forgive it. Live and let go. Or as James Bond would say, live and let die. Forgiveness, folks, in Fibonacci terms, we're going to talk about Fibonacci here as we go take a look at the charts. Forgiveness in Fibonacci, you know what that means? That means expansion. So if you want to be able to expand in life when it comes to understanding the charts or just simply your life, what you want to be doing is you want to make sure that you have just simply forgiven all of the pain, whatever hurt it is that you've had, if you want to be able to expand. If you're looking for contraction, That's what we call in Fibonacci contraction, simply pulling back, pulling into your shell or what have you. You know, it's not the way that I suggest that you live. I think you just simply recognize contraction. You recognize contraction as a place to be able to enter a trade. Well, just simply, how about the trade in life? What I want you to do, folks, and I want you to just simply answer that question, are you contracting or expanding? And when is it that you, and if you're in an expansion mode, I applaud you big time out there. That means you have forgiven. That means you are focused on knowing that you, in your journey, that you are going to achieve your outcomes out there, folks. It's just a matter of time. Be a pioneer of your future versus a prisoner of your past, folks, because your potential, and you know it, it's absolutely unlimited. Live today as if you would receive everything that you want out of life. It's just a matter of time, because the moment that you forgive, folks, that is the moment that you let go. It is Columbus Day out here, and I want you to celebrate your journey. Sail your ocean blue, just like Christopher Columbus did. Now, he didn't exactly do it today. He did it on October 12th, 1492, but here in the U.S., we celebrate it on the Monday closest to that, because our bankers and our government, they like those three-day weekends out there. You can't blame them. But I sure am glad that we're here. If we take a look at these markets, let's go celebrate the discovery in the markets out here. You know, it is Marvelous Monday. Right now, we've got the Dow futures off about 50 points here. The ES Mini down about 6. It's trading out at 1450. Even, Stephen, you've got the NASDAQ futures out at 2788. Russell 2000 really not leading the charge on the way down, at least in the futures market, off about 3.5 points. King dollar up 27 ticks. Currencies struggling a bit here this morning. You've got gold trading down $7 for the strength in the dollar. Gold really hasn't budged much. Silver, though, down 60 pennies. That's down 1 7/10%. So from a metal standpoint, silver off the largest out there. You've got light sweet crude down 81 cents. That's down less than one for just slightly under 1%, about 0.9% out there. You've got natural gas off about 2% this morning. Our call-in number is always 877-927-6648. Would love to hear from you. The DAX down 95 as we just simply take a quick peek around the globe here. You've got the DAX trading off 95 points. That's about 1 3/10% off. You've got the FTSE off 0.7%. That's down 40 points. Over in Asia last night, you had the Shanghai. They came back to work, only down 12 points. That was off 0.5% out there. The Hang Seng off about 187 points. That was 0.9% out there. Let's go take a look at our futures market out here. Let's go take a look at the 30-minute chart. If you are watching us on TigerTV, what you are seeing is my 30-minute chart here for the S&P futures contract. If you're listening on the radio, or maybe you're listening on tfnn.mobi, thank you so much for doing that. You can always catch an archive of this show on Channel 9. We take a look at the futures contract. We are seeing this little rising price channel here that's been in place. And again, this is just simply going back to the beginning of last week, to Monday. And you can see how price really stayed within inside this price channel. Had a slight breakout here after the release of the jobs numbers on Monday. Now, that's the only way that you can have a breakout of a rising price channel, which would be in which direction? If you're going up, you can't really be breaking out, can you? It would only be if you were going down. What we have seen, and again, a very ultra short-term rising price channel, but it is one of the things that you want to be able to learn, to be able to draw on any of your charts, just to understand what's going on. If we do take a look right now at the ES Mini, I'd say we're still making higher highs and higher lows out there. You did break through that rising price channel. Interesting how it's been along. You want to make sure that you've got as many co-located opens and closes as you identify your channel lines. And don't be worried about redrawing your lines out there, folks. If you can find more co-located opens and closes, then change the angle of your line. It's just like steering your ship out there. I'm sure that Columbus made a few changes along his journey. You should too, and that's what the charts are out here. Now, what you did have is you did have a breakout of this rising price channel. You can see here as we are coming down to the show into the 9 o'clock time frame, when you break through a rising price channel, it makes sense that it's going to go back and it's going to test it. Well, the first test actually came about as we were coming in to that 9 o'clock hour. 9 o'clock hour here. You can see how, if you take a look at that candle, in fact, if I blow it up right here, and I will do that, you can see how price got in there, rejected that area so far. But what's also important out here is the hammer candle. That hammer candle candle coming in Friday. I shouldn't say yesterday. Just seems like yesterday. Coming in on Friday as the ES Mini was coming into the close. So that created a little hammer out there. Why is that important? Because when you break a hammer, and that's exactly what happened here on the ES Mini, broke at 4 o'clock this morning. When you're wrong, you're long out there. Now, that area of support has been broken. You can see it's acting right now as another area of resistance out there. You want to understand the signs that the sign builders, those are the bulls and bears, are making each and every day. It will absolutely help you to navigate this market, understand what the bulls and bears are communicating to you. If you haven't had a chance to download that report, and I know that there's nearly 1,000 folks, which is a beautiful thing. Thank you so much. Now, the last report that we did, we were up to 2,000. So I'd like you to tell some friends and neighbors. These are folks that maybe they'd like to understand just a little bit about the marketplace, or maybe just simply learn something new out there. You know, there's always two ways to look at a market. That's why you should always come back to it, look a little bit further out there. Go to the homepage at tfnn.com. You've got my free report called Candlesticks, Silent Signals. And if you're looking, folks, if you're looking to understand the communication language of the markets, you can click on, there's a link on there. You can also click on the homepage at tfnn.com. You will see a workshop that I'm doing almost 2 weeks. It's not this coming Friday, but the following Friday. It's an online workshop. So even if you can't attend, it'll be archived on your members page. I believe it's for at least 30 days out there. And this is a language that you certainly want to understand. Talk about hammers. Well, let's go talk about perhaps the most important hammer that's out in the marketplace, and that's none other than Apple. So if we do take a look at Apple, Apple broke the hammer, which was from September 12th. That hammer had 25 million shares. We know that hammer candle was tested on October 7th with 22 million shares. Friday, you get it closed below it on lighter volume, a little bit lighter volume, 21 million shares. What does that set up? Well, now all you've got to do, and you want to make sure that on any chart, what you're looking for is you're looking for volume days. Now, you want to make sure that you have your retracement levels drawn, right? Those are your pain levels, as we talked about in the opening here. And when you take a look at retracement levels, you want to go from the most significant swing point low to high. So as I pull this chart back here, you're looking for that intersection where you've seen a real change in trend. When it comes to Apple, you would be looking at the low of May 18th. That was out at 528.66. That is where you would begin your retracement ruler. The high that we'd be looking at is from September 21st. That high is out there at 705.07. James Bond, 007. Well, it wasn't 007, but it was 07 at least. And so what you take a look at is your 0.382 level, nothing more than a dead cat bounce. That would take it to this number of about 637. Looks like 637.68, and voila. What else do we have down here? Well, you've got a number of gaps. I mean, Apple just simply was gapping up all the way up off of the lows, its most recent lows in July out here. If you do take a look at high volume bars out here, what you're going to see potentially holding it in place, or if you take a look at Friday's action, you look at the bar of August 21st. That had 29 million shares, the low, 650.33. Tested that area, rejected that area, closed at 652.59. But when you do break a hammer, if you're long, you're wrong. But you need to understand where the other support levels are. 877-927-6648. Give us a call, folks. Would love to hear from you. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Well, Jobs Friday lived up to its expectation, didn't it? I mean, if you were listening to my show, I had pointed out to you that we took a look at the last 11. So we just looked over the last year with Friday making the 12th. So we just went back, took a look at the patterns, and those patterns showed us that 75% of the time that a Jobs Friday did what? It finished lower. Well, if you took a look at the S&P, it did finish lower, 47 cents lower out there. New York Stock Exchange was a little higher, though. Something to think about when you take a look at the underlying breadth of the marketplace out there. But Jobs Friday absolutely lived up to its expectation. If you were listening in to the Nadex Bull Bear Binary Option Hour, Daryl Martin and myself put on a couple of trades out there. I do believe they worked. We went ahead and shorted the euro. We were taking a look at the ultra short-term indicators that were out there. And if we go switch, so my question to you, because there are patterns that I talk about, and sometimes those most of the times those patterns are A to B equals C, D patterns. Maybe they're retracement patterns, but there's other patterns that exist out in the marketplace. And today being a Monday, I would ask you the question, just going back and maybe taking a look at off of the lows from June 4th. Why June 4th? Because, well, that was the last time that we put in a serious low inside the marketplace out there. But the question is, especially if you're an intraday trader out there, have you gone back and taken a look at the patterns as to how often Mondays were up days or down days? Have you done that? And why not? Why have it? I suggest you go take a look at it. If you're in the den, have you gone back and taken a look at Mondays to see if there is a preponderance of evidence with regard to what direction the market ought to close today? I suggest that you do it. It's pretty easy. You're only going back and maybe taking a look at probably about 18 Mondays or so. I'm pretty sure it's 18 Mondays since June 4th out there. And maybe your eyes will be open to other patterns that exist inside the marketplace. If we go take a look at the patterns that we've got sitting up here in the NASDAQ futures, why the NASDAQ? Well, we were taking a look at Apple. We were taking a look at Apple breaking that hammer candle. Not a good sign if you hold Apple, of course. On that Apple chart, there were some high volume days. There were gaps. So there's many levels inside Apple of support out there. And it broke that hammer candle on what? On lighter volume. So the conviction on the way down here on Apple isn't as strong. If you did have some wide price spread, if you did have accelerating volume, breaking that hammer candle would have even more significance out there. If we take a look at the NASDAQ futures, you can see, if you're watching us on TigerTV, you're seeing the line that is drawn in the sand. Now, that line in the sand, folks, is nothing more than an old resistance line. That resistance line really, what I'm using in general terms, is the high from March 28th out there. Why the high from March 28th? Well, one, that was a significant swing point. That was a significant change in trend in the marketplace. That swing point was tested a few days later, was tested on April 3rd, 2012. And then it was tested here during this entire series of candles as the market moved back up there in August of 2012. The market went sideways for a period of a couple weeks. That line drawn in the sand, that resistance area, folks, was tested, and finally the only thing that could budge it loose was Super Mario Day. That was September 6th out there. Of course, you had Super Mario Day. Then the market goes ahead, digests those earnings, pulls back, and then you had Ben Bernanke Day on September 13th, that getting up above that area. So far, you've only had, and you can adjust the line just up or down just a little bit. You don't have to be exact. What you can see is the actual price point of that March 28th day. That is 27.90.25. I think I'll go ahead and write that in there maybe when we're on our next break out there, so that I don't have to always go look at it. You've got the NASDAQ futures right now trading out at 27.92.75 out there. I'd say that is a pretty good area of support. And just underneath it, we've got Super Mario's line out there. That price point here is the price point of 27.66.50. Unless that area is broken, the market just simply chugging sideways to slightly higher, I would say. And I do expect that what we will see is the market resume higher here. But first, you'd have to understand, of the last 18 or so Mondays, how many of those days were up and how many of those days were down. I suggest you go take a look at it, especially if you are an intraday trader out there. Let's go take a look at some of the other now, actually, let's just go back here to the NASDAQ futures, because one of the things we can do, even though this is on the daily chart, let's just go from the swing point low. We're going to use the day of September 26th all the way up to the swing point high out there. And what you'll see, you've got the NASDAQ futures trading right at that 618 level. 27.7905 would be the sweet 786 number. 877-927-6648. We get back, we'll go see how these markets are going to drop, whether they're going to pop. Trading to the upside this morning, you got Netflix, you've got Viringo to the downside. Apple trading off a bit. Green dot seems to be a red dot this morning. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 44 points. S&P's off 6. Composite down 20. Small caps it's the composite leading the charge. Down 0.6%. In second place is the small caps off 4.5 points. That's down 0.5% out there. Microsoft down 26 cents this morning. Intel off 22. Google down $9 and change. Cisco basically flat. Apple down $9 as well. Popping to the upside here this morning, you got Netflix. Netflix being the leader in the clubhouse, hard to believe. That's up 8% this morning, up $5 and change. TPC Group, not the golf course, but I don't think it's the golf course. TPCG is the ticker symbol. They're up 10% this morning. Marathon Petroleum, MPC, up 5%, up $3 and change. CarMax, KMX, the ticker symbol, up about 8% this morning. QLIK, QLIK, Technologies up 7% this morning. Harley-Davidson, the hog, that is up $1. If we take a look, leading things to the downside is Apple, off $9, about 1 4/10%. Google right behind them. Therefore, we are seeing some weakness here in the Qs. You've got Ashland Inc. down $2 and change. That's off 3%. Green Dot, as I said, having a red dot morning out there, down 20%. We'll take a look at that. In fact, let's go take a look at Green Dot right now. GDOT is the ticker symbol out here. Let's go see what that is doing. Looks like it has gapped down this morning. Oh, it gapped down earlier. Man, what a nasty gap this thing is. So let's go take a look at it. Let me make sure I've got this is a green dot here. It's trading out at 10:48. Okay, so we're good. So how does it say? Let me refresh my screen here. I've been struggling with the data feed here just a little bit. There we go this morning. There we go. Okay. So now as we take a look at green dot, because I remember taking a look at this equity here when it just totally broke down. That was on July 27th as it gapped down with 18 million shares out there. You take a look at volume out of the tank here, and this thing here struggled. You know, it's moved higher. The low, actually, and it was a high volume low, and it said that it was going to be tested, folks, and looks like it's going to be tested sooner here than later, and today might be that day. This thing gaps down with 18 million shares, closes at 906, the actual session low 904. Major volume, especially when you take a look at this equity out here. So far this morning, it's gapped back down in that area. And it retraced back up to a high on September 24th, got up to a level of $13.59 out there. And this morning here, gapping down, it's got volume in it, already 1.3 million shares in just the first 7 minutes of trading. So I would look for a green dot to go back and test the low of July 27th out there. But this is a loser of a equity. If you take a look at this thing at one stage, and I just put up the monthly chart, and it's why you want to understand the candle signals out there, folks. This gave you a bearish engulfing candle on the monthly chart. It did that the month of February 28th. And when it engulfed the prior month, it engulfed the month before that as well, which was December. That was giving you a signal, at least as far as a sign building by the bulls and bears out there to be careful. That had traded to a high, folks, back in January 2011 to $65. That was a round number high out there, now at $10 and change out there. So you want to make sure that you are aware of the candle signals that are out there, because it is the communication language of the bulls and bears out there. Let's go take a look at what do we got. Let's go from dropping to popping. So let's go take a look at the TPC group. Again, their ticker symbol here is TPCG. I want to see what the TPC group actually does out here. So let me put that in my little research tool. It'd be nice if I could do that. Let me move this up here. So TPC group is what we are taking a look at. Again, that stock symbol, TPCG, they produce and sell value-added products derived from petrochemical raw materials to chemical petroleum in North America. Popping up by 10% this morning, gapping up. Looks like it's got some volume behind it. Let's see here. What do we have as far as any kind of news here? TPC Group says Innospec would pursue an acquisition. So looks like they're being acquired by Innospec. And if we take a look at this equity here, man, you had some big volume. So here's one of these days, and you never know what these days mean, because these days here, somebody knew something. August 27th, it does 1.7 million shares, but no wide price spread. You had accelerated volume, but if you take a look at just simply the range on that, it was $39.80 was the low, $40.19. Not much of a range out there. This thing gapping up this morning into the $45 and change level. Looks like everybody in this equity should pretty much be happy, because everybody here is in the green, with the exception of a few folks taking positions here back in the April and March 2012 timeframe. But at least they're getting their money back. Let's go take a look at Netflix out here. Let's go see what Netflix is doing. Excuse me, as I believe Netflix was moving into an area where it broke down. Gapping up this morning, doing it with some decent volume. So Netflix is really just trying to get back into the area where it really broke down. And right now, Netflix is actually approaching the overbought area, I apologize. And if we take a look at Netflix, it is trying to make its way up to the July 24th low. That low is $77.81. That area where it broke down. Again, what you want to do is you want to be paying attention to stocks that break down and stocks that are breaking away, are breaking out. And the same, when you take a look at a chart, you're just simply reversing it. And breakout stocks are a great way just simply to invest. You just sit there and wait for a stock to pull back. We'll go take a look at the Sarepta Therapeutics. That's one of the stocks that we certainly have been following. Well, if you take a look at Netflix out here, Netflix gaps down on July 25th. It wasn't the first time. If you come back and you take a look at Netflix, it was gapping down all the way down off of its highs when it was trading out at the 295 range, trading out at $71 right now. So its most recent sign of weakness happened to be on July 25th, 24 million shares to the downside, closed, let's see, that high, 66.80. Where did it actually close? It closed at 66.56. Was testing that area on Friday with 8.5 million shares. At 8.5 going against 24 million shares. I don't know that Netflix is going to make it all the way up to the bottom of that gap, which again is 77.81. It is in overbought territory. Could run just a bit higher out here. But Netflix, if you're long Netflix, now would be a good time to really tighten your stop and maybe consider taking some profits out there. Let's go take a look at Google, see what Google is doing this morning, leading the charge on the way down 0.8% off $6 here. So let's go see what, of course, you have to type in the symbol, right, in order to be able to pull it up on your screen. GOOG is the ticker symbol, gapping down here this morning. And let's take a look at Google. Google on Friday, closing out at 767, does 2.7 million shares out there. That 2.7 million shares going against the high volume day from September 25th, which had 6 million shares. Nothing here substantial so far this morning, 218,000 shares in the first 12 minutes of trading. Google, let's go ahead and put this back on a weekly chart, see what Google has done here. Let me get rid of the line out here because it broke through that. Let's put the 100% made a 100% move of a move, folks, going all the way back into the 2007 time frame. The high of that bar was from November 9th, 2007. That high, 747.24. You're at 761.18. The volume there, let's go ahead and draw the line along the bottom so we can take a look at volume as it was coming through that area. Does not look like it had the volume up there. It did get above it. May want to seek higher price, but now what you should see is, now this area here, as you take a look at this, unlike when we were taking a look at the NQ during the first or maybe it was the second segment this morning, now in the NQ what we had was we had a tested area of resistance. In the case of Google, there's no test of this swing point high out here. What you should expect, because you did get over it, not you, but Google got over it on the weekly chart, got over it on lighter volume. You would expect now for it to come back and really test that area. Came close to testing it last week as it got down to 750.27. Again, the high there was back in 2007 was 747.24. I suspect that, in fact, if you're bullish, you want to see Google come back, test that, reject it, and then see some kind of sign of strength come in. So on the weekly chart, Google did not make it with volume. If we take a look at, let's see, leading things. So we had green dot leading things to the downside. You've got Progress, I should say, software. That's down 12% this morning. Let's go take a look at its chart. PRGS is the ticker symbol. And let's go see what this is doing, gapping down for sure. It has some volume. It's coming into an area where it had its last sign of strength out here. And what I mean by that is if you take a look at this equity, showed a nice sign of strength on September 27th, 1.7 million shares to the upside. So you had wide price spread, you had accelerated volume, you've got a high volume low out here. Now this high volume low was tested. It's going to be tested again this morning. I'm going back, so this is really in a consolidation range. This thing was tested, June 8th was that high volume low. Let's go ahead and pull the line across. You can see when it was tested, I'll just mark this line just a little bit underneath it to make it easier to see. It was tested right here, August the 2nd. So we're looking again at the stock chart here is Progress Software. PRGS is the ticker symbol. But why you want to be paying attention to high volume anywhere is just simply highs and lows. They will be tested. So if you take a look at this equity, August 2nd, pulls back with 268,000 shares, closes above it, says it rejects that area, so now it wants to go try to bust it up. Where is busting up? Busting up in this case here was its most recent swing point. That would have been July 5th. That July 5th swing point, the high was 21.16. Let's actually draw that line. We'll use a black line on this one just to make it a little bit easier to see. So let's go take a look at the volume out there on this, and as it busts up that area, it most certainly has volume, and it has given it up certainly this morning, coming back to the lows that it's establishing. So this thing really being in a horizontal consolidation zone. The lows on that, certainly you could say with the lows would be the June 8th lows. If this equity closes back inside 1842, that'll set up going and testing the low. This morning, though, let's take a look at the other area where it is testing the most recent swing point. So let's draw that line across as well. Well, that didn't work. Let's try it again. Let's draw the line across here. We'll do it at the highs. And then let's go take a look at the volume of that session. That's what you'd want to be watching today. Well, we can already take a look at it. Today you can see you're coming down through that area with volume. And what I'm doing, folks, I'm taking a look at the swing point here from August the 2nd. That swing point was testing the high volume low going back to June the 8th. Now, this swing point here from August 2nd, that had 268,000 shares. This morning gapping down with already 300,000 shares. So you're gapping down with volume. That says that this equity wants to at least get back and tag that high volume low from June 8th. That's 1842. You close inside there. What's it going to do? It's going to go and it's going to test the low of that candle. The low of that candle would be the price point of 1730. Oh, you've got as we take this back, you've got another high volume low out here. This happens to be the so you can see where the bulls and bears are. That's for sure. This thing here, January 4th, 2012. The high on that is 1899. The low is 1701. So here you've got high volume lows. You can see they continue to be tested out here. And it's why you always want to make sure that you're paying attention to where volume is on any chart out there. Let's go take a look at Marathon Petroleum, MPC. That's trading up. We'll take a look at Carmex. Both those equities trading up. MPC, that is up 8% this morning. Looks like it has volume here to the upside. This looks like a stock where everybody is at the party, having a good time. Let me just refresh my screen, make sure we've got all the data out here. Looks like this may be an equity that came online June 23rd. This thing here, everybody is at the party having fun. Let's go take a look at the ABCs. Why do I say having fun? Because everybody's making money, folks, and making money, that certainly is fun out here. Our A point on this is going to be the swing point low, September 29, 2011. That price point, $26.35. Your B point on this looks like it is, what you can use here, is the February 8th, 2012 level, 45.42. Pulls back down here into a retracement. We'll go measure that retracement. That retracement coming in on June the 4th makes sense. The market makes the low on June 4th. This equity makes a low on June 4th as well. Let's go take a look at that retracement. That's why you certainly want to get the market right. And this thing here, the 0.618 area, $33.63. The equity actually traded down to $33.65. Missed it by 2 pennies. Can you believe that, folks? Missed it by 2 pennies. It's why you certainly want to understand Fibonacci retracement and expansion between swing points out here. Now, if you take a look at this C to D move here, take a look at what was that signal along this C to D level? Was that telling you that you were going to likely do more than a 1-to-1 A to B equals CD? I say it absolutely does. Now you're taking out the 1.272 area because as you got up to those levels, I don't see a bearish candle out here. As we take a look at it, this wants to get to the 1.618 level. That is $64.43. It's traded at $59.62 right now. Let's see if this thing took out a B point with volume. Let's see if this thing has everything that one could ask for in a equity. First got to draw a straight line. Oh, that didn't work real well. Let's see if I can do this here before the break. Let's put this volume in here. The volume on that swing point day, let's see, 45.24. 45.24. That volume was 3.5 million shares. You came through it here. You did it with 3.3. 877-927-6648. Dow off 46. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. We got the Dow down 39 points right now. S&P's off 6. Composite down 16. New York Stock Exchange off 40 points. Index 100 off 15. And it is Marvelous Monday. That means that Tom and I are doing the Money Masters show. Next time we go up to Basil Chapman from 11 to 12 up to Newton, Mass. We'll go see what Chapman Peak is doing, whether it's a peak or a trough. We've got the Larry Pesavento from 12 to 1 a day, Daryl Martin from 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and the Tom O'Brien Show from 4 to 6. A full lineup out there. Let's go take a look at what's going on in the world here. You've got the DAX trading down 1 2/10% here off of its session lows. Trading out at 73.05 right now, getting down to a low intraday of 72.86 out here. Really, the DAX here just simply, moving sideways. I am interested when Tom comes in to understand what the volume was on Friday's session. The low, we know we had a high volume swing point. That was September 21st. The low of that was 73.9106. The DAX closed at 73.97. It closed inside that. Want to see if it was coming in there with some volume. That would suggest that the high would want to be tested. And I suspect that's what we will see out here inside the DAX. We go take a look at the Shanghai out here. You know, and the Shanghai has been what now? The Shanghai was closed all week, so I need to just delete this bar. The system here ought to take it out here soon. So let me see if I've got my delete button. There we go. We'll delete last week since it really didn't exist. Now, if we do take a look at after, you know, the entire week here being off, the Shanghai, which we know has absolutely been weak out there, really didn't trade that poorly as we take a look at yesterday or last night's action, pulling back on lighter volume. The Shanghai back inside the sign of strength that goes back to September 7th out there. The low of that was 2160.47. You got down to 2160.48 in overnight trading, and then closing out at 2172. And we know that that was on lighter volume, certainly with regard to the breakout. So interesting, very interesting. I would go take a look at currency, but my currency feed is off, and I'm not going to go take a look at that. But we can take a look at the King, see what the King is doing here. Now, when I take a look at the U.S. dollar index, folks, I'm just really taking a look at, you'll see a diagonal line on my chart. It's coming off of the highs from July 24th. And this is nothing more than a trend line. It's not a channel line out there, although if you drew the channel lines, I won't do that here during this segment. But if you just simply take a look at the trend, you know, and you can see here on the trend, what do you got? You got lower lows, you got lower highs as well. And the U.S. dollar index now needs to break that trend in order to to start moving out. So you've got the trend of the U.S. dollar index still moving down. You know, some of that is being spurred because of what Uncle Ben is doing with our greenbacks out there. He certainly wants he wants a weaker dollar out there. We'll see how long that's going to last, but still, from a stock chart standpoint, you can see the U.S. dollar index trading below its most recent trend. I expect we'll see it get back up and test it, although it has not done it thus far. If we go take a look at some of the, well, I don't have much time, but let's go take a look at the XLF, see what the XLF is doing today, trading out at 1603. The XLF is really got some nice signs of strength in it here. Certainly had that on September 13th. The highs, which were tested on Friday, those highs had 122 million shares. Tested it just slightly, closed lower. Looks like the XLF trying to attack the session from Friday. Stay tuned, folks. Tom and I will be up next. And hopefully you are having just simply a marvelous Monday. Remember, it is Columbus Day, and on Columbus Day, we celebrate our own journey as well as his. Sail your ocean blue, folks. Today is the day to celebrate your discovery. Remember, be a pioneer of your future, not a prisoner of your past. We'll be back in just a few. Thanks, folks.